Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Well, today was an interesting day, and today being Monday, March 10th, 2008, for the most part the market sagged, and I really want to get into what happened today more than anything for the key reasons of support and resistance on the downside, because we're slowly creeping towards that January low on the SPY and on the S&P and the Dow, and we actually took out that low on the Nasdaq. Now, a week or so ago, we talked about the pivot of February 7th being broken to the downside and the likelihood that that would signal a pivot move down to that January lows, and it sure looks like it's happening. I would have expected more of a bounce, and I still expect something to come out over the next few days that will trigger a bounce. But in any case, that's just speculation on my part, and the charts are telling us that the January lows are on their way. So in any case, let's look at the intraday chart on the ES here. And again, we use the ES futures to talk about the intraday because the moves are much more pronounced as opposed to other charts like the Nasdaq intraday. And what's nice about this chart here is that we look at the 10-minute intraday, and you can see that the variance in moves. You can really tell the moves here, and it gives us a much clearer picture. Now, early in the day, we saw the markets actually upticking just a little bit, and you can see this little trend to the upside. And it's a firm belief of mine that the markets were somewhat speculating. Maybe we may see a cut in interest rates. In fact, Goldman Sachs said something today, pre-market, that said they expect a Fed cut to come out before the next meeting, possibly. Now, I've been saying that for days, if not weeks here, that I would not be shocked to see another cut. So maybe I am at InTheMoneyStocks.com. Maybe we are just one step ahead of Goldman there. But in any case, you did see the markets upticking here early on, but pretty quickly we saw some selling come in. Once the market started, we actually made a couple attempts to go positive. We basically opened flat to negative on the markets. The markets got a quick push up here to hit that intraday 200 MA, and then a quick sell-off, and one more chance they got right here, right into this necktie. And again, the necktie is a key resistance area where you have two moving averages crossing, double resistance right at that midpoint right here. And oftentimes that will be major resistance, very hard for a market or a stock to get above that area without retracing first and getting away from that necktie. And sure enough, you can see the sell-off that ensued following that. Now, what did you have right here? You had two bottoming tails, and beautifully done right here, as you had a little bottoming tail here, and then a little buy come on, and then a retest of that same low, and another bottoming tail, and then a continued buy program, or not a really buy program, but more of just a gradual increase in price on the ES, which took us right into that 20 moving average. And just like we've seen lately, the market just can't get above the 20 moving average. This 20 moving average during the day, it seems to be this huge resistance point where the market just tries, and it seems to be the biggest wall in the wall of China, in fact. So sure enough, we see the market sell off through here, come all the way down. Another little bit of a bottoming tail. You got a little buy program after that, or a buy candle, but it really didn't materialize into anything. As you can see, this 20 moving average just could never be punctured to the upside and closed above. So that's the story of today, folks. There wasn't a whole lot to say other than that. You had the market's Nasdaq moving down 43 points today, which is a significant sell-off. You also had the Dow moving down 153 points, and the S&P moving down 20 points. So it was not a small down day on the Wall Street at all here. For the most part, everything was down 1.5% or better. The Nasdaq was down close to 2%. So you're really seeing the market continue to trade down here. And I want to show you go into the charts a little bit on the Nasdaq. And you can see here, here's the January lows, all right? And on Friday, they actually closed us above with that late-day rally. So it was a very interesting rally because it actually was able to push the market from this point down here back to the positive side. It didn't close the market positive, but it closed it above that breakdown line from January lows. Well, today we took that out, folks, and we closed at the low of the day today. Now, oftentimes, a close at the low of the day can signal a reversal or a possible change in trend. So we are going to see if that comes to fruition. It's not 100% by any stretch that happens, but oftentimes a close at the low of the day is the more bullish sign, all right, than people let on it or believe it to be. So we're all going to focus in on that. Now, the one negative here is that TXN, Texas Instruments, TXN, and I'll bring up the chart here. This is the daily chart, but here's the intraday chart. TXN came out after the bell, Texas Instruments, and actually warned. So there's going to be some issues in regards to tech maybe being a little bit of a weak on that angle. and we'll have to see if that comes to fruition. But Texas Instruments is trading down about $1 on that warning. Now, let's go back to the Nasdaq on the daily because I really want to focus in on this chart. You can see we actually closed below January lows at this point, and we always talked about over the last month or two in these videos the Nasdaq being the weaker index, and the Nasdaq's not disappointing here. Without a doubt, the Nasdaq is the weaker index as we have closed now below January lows, as opposed to the SPY, which mirrors the S&P here. And here's January lows here, and we'll draw those in here quickly. Do it right there. And you can see that it's not even, it is closing in on those January lows, but we haven't even touched them yet, as opposed to the Nasdaq breaking through already. So the question will be, in my opinion, do we brush these lows and double bottom before a bounce? There is a bounce on the horizon at this point. There's way too many bears out there, in my opinion. It's just a matter of when is it going to come. The put-call ratio, which measures how many shorts to how many longs, essentially, or how many people believe the market to be going down to going up, is approaching the pivotal 1.5 area on the intraday. Now, we use that as a great psychology indicator, as it measures, how many people are bearish to bullish. And right now, there's becoming more and more bearish players as we approach that double bottom level right here on the SPY. So it's very key to watch that. Now, it doesn't mean we don't have another couple down days in the forecast, but in my opinion, there is something on the horizon, whether it's the Fed next week, whether the Fed comes out tomorrow or the next day and, cuts rates, or the government steps up and does something. I don't know. But nonetheless, something is definitely coming out. Another interesting thing that happened today was the Elliott Spitzer news, and I'm not going to get into it because we don't really talk about politics and news like that. But it's just amazing how things just come full circle. Someone who goes after Wall Street bigwigs with a vengeance like you've never seen before, taking them down, seems to get taken down by his own web here. It's just unbelievable, really, to think about. So interesting news there, interesting story to read up upon about how he went after people in certain ways, and now it's coming back to haunt him. So anyways, long story short, I don't want to get into that anymore, but taking a look at the SPY again, we're going to look at key levels here, all right? On the upside, you obviously have the 20 moving average as resistance. On the downside, this double bottom. So we are approaching this double bottom area. You would, for a scalp play, that would be a bounce play, and it would be interesting to see if we touch that intraday, if we do close back above, or if we push through it intraday, do we push back and close back above this line and maintain that double bottom? I would be shocked if this quickly we took out that low. It would be a very interesting sign considering how many bears out there. You have Options X coming out very shortly. I think that's next week. I got to look into the schedule. I know Good Friday's closed in the market, so I'm not sure how Options X will be affected. We'll have to look into that. But you always know, we always talk about Options X and how volatile that week will be and how they usually go the opposite way. That's not going to change. They're going to do, there's going to be some fireworks. The Fed is coming out on the 18th of March, which is next Tuesday, I believe, and we'll be doing interest rates if they don't do something earlier. All right, so we'll continue to watch that as well. Now let's look at the QQQ, because the QQQ shows you how weak the Qs are as well. This mirrors the Nasdaq in many ways. And the QID, you got to tap, the QID, we were pumping the QID on these videos back when it was like $33, $35. Now it's closed today at $57.60 and after hours trading above 58 on the Texas Instruments news. And what a chart on that. We kept on pounding the table right in this area, on this double bottom area right here. And wow, what a move there. Unbelievable. It's just a tremendous to look at a chart. It's an ETF, no less, and the percentage move in that, you're talking about nearing 75% move up now. All right. Now the other thing I want to touch on today is oil and gold. Now gold was an interesting character here. We saw the GLD actually down just slightly, but off the lows for sure. And you can see the GLD gap down here, but by the end of the day, it had closed all the way up here. So that was an interesting chart. More than anything, the dollar was a little weak today again. But here again, oil just screaming up. The USO at 177 today, up 177 to 85.50. And it is approaching that, I think it touched $108 today, and it closed in the 107s. Ultimately, I'm looking for a push through 110, and that may be a position where I take some puts on oil. You always want to let all the amateurs go short, and you want to just sit back and wait, because they're going to squeeze those guys out. It's those that, once they get squeezed out, then it falls. So if we can wait through this, push maybe through 110, that may be a possibility for to pick up some puts or go short the USO. That seems to me to be the best play there. And again, you always want to keep a tight stop on any of these plays, and you always want to maintain, a stop as well as just keep your wits about you, because there's nothing that says it can't go higher, but it's very, very toppy. Looking on the daily chart, I mean, look at this move. Tremendous move. And by the way, I mean, just to point something out here, you have a beautiful little W pattern formation. So ultimately, you just look for a pullback right to this area, and that would be where you'd have to, move out. And that would be almost perfect for a little V pattern before another push up. So that would maybe be a move back to $95 or so. Ultimately, oil can really drop. If the dollar ever starts to strengthen, gold could really, and oil could really, really fall dramatically. All right, guys, just touching on a couple other things as we go into the close here of the video. We are having a webinar coming up. It's going to be on Saturday, April 5th, I believe, the first Saturday in March, in April, excuse me. And you can go sign up for that immediately. We will talk more and more about that in these videos. Also, come join the chat room, the e-mini chat. We combine them, and it's a true value that can't be beat. The price will on those be going up, so lock that in once we get the new website up and running, which is in the works with a lot of other new upgrades coming at the website and other products. So keep an eye on that. Come visit inthemoneystocks.com. Email us with questions. We'll get back to you ASAP. Have a wonderful day, guys. We'll talk to you tomorrow.